And even if COVID goes away, we don't know if it's going to come back. Maybe there's going to be a COVID-20 and a COVID-21. I have no idea. But also, I think that COVID has now set the standard for how we respond to any new infectious disease. We're just going to shut things down and ask questions later. So this is a whole new level of risk that has been entered into the economy and now has to be priced in to the goods and services that every business provides, because everybody has to realize this. And insurance companies who may be on the hook for losses that relate to this, they have to start pricing this into their premiums. And so now businesses have to, absorb the cost of higher premiums. The whole global economy is going to be less efficient for a long, long time as a result of what just happened. Even if this vaccine gets on the market. But if it does, we still have to deal with all the debt and all the money that was printed before we got the vaccine, and all the debt and all the money that's going to be printed between the time they develop the vaccine and the time it's actually in use, right? And it's going to take a while. And then, of course, people are going to have to be convinced to trust the vaccine. A lot of people will be afraid to take the vaccine. So how long will it take before people are willing to take it? And remember, the governments are already building up a big culture of people who are benefiting from COVID. And COVID gives them the excuse that they're looking for not to have to work. Remember, there are a lot of people that have jobs they don't like. They're tedious, right? They're boring. They have long commutes. They would rather not go to work and get paid. And if they can do that by claiming they're worried about getting COVID or they're worried that the vaccine doesn't work, they want an excuse to not have to go to work. They would rather to continue to ride the COVID gravy train and milk it as long as they can. And I think a Biden presidency and a lot of the Democrats in Congress are not going to ignore that, because they want that. They want to be able to have voters dependent on government largesse. And so this is an excuse and get more people hooked on this government. Gold got clobbered today. Gold was down about 80 bucks, about a little over 4%, right? Almost 4.5% drop in the price of gold. That's a big move. I mean, it's not unprecedented. I've seen the price of gold move down by more than that, but it's a big move. And in fact, I think at one point during the day, we were down closer to $100. As I'm looking at right now, we're down maybe about 85, 86 on the day. We were trading on gold above $1,960 an ounce this morning. We were up, 10 bucks, 12 bucks last night. And now we're $100 lower than that, trading at, 1860s. But still, I don't think that this does anything to disrupt the underlying uptrend that exists in the price of gold. And of course, a lot of the gold stocks got hit even harder than gold itself, although they held up pretty good considering how big the drop in gold was. The GDX was only down just over 6%. Now that is a big move, but not when gold is down 4.5%. And the GDXJ was down actually slightly less, 6.09%. Normally you would expect the juniors to be killed on a day when gold's down 4.5%, but they weren't. I mean, they were down, but they weren't slaughtered. So there is some smart money out there that is buying these dips in these miners. I understand the initial leveraged reaction to the news, right? Sell all the safe havens, sell anything that benefited from COVID. And that's why all these stay-at-home stocks got killed. But that's also why gold went down, because a lot of people just assume that gold benefited from the COVID trade. In fact, other safe haven currencies that people would have bought also got clobbered. The biggest losers today were the Japanese yen and the Swiss franc. The Japanese yen was down about 2% against the dollar. I think the Swissy was down maybe 1 to 1.5, I forget exactly. But the dollar index, or the dollar itself, was down against most currencies because you had strength in a lot of the commodity currencies, a lot of the emerging market currencies. Again, these were the currencies that really got hurt as everybody was worried about COVID and going into the safe haven currencies like the yen and the Swiss franc and the dollar. And so they sold those currencies now just the way they sold the COVID stay-at-home stocks. And I think the weakness in the Swiss franc and in the yen also work to pull down the price of gold, because gold does have a pretty strong correlation to those currencies, particularly the Japanese yen. I mean, if you look back over the last few years, you'll see a pretty strong correlation in a positive way between the yen and the price of gold. So a big drop in the yen generally would mean a big drop in the price of gold. And that is what happened today. And the same thing again with the bond market, right? The bond market was considered a safe haven in, the times of COVID. People were worried about the economy. They're worried about all sorts of stuff, people defaulting, and they were piling into treasuries. So people unwound that, right? Today was risk on and safety off. And believe it or not, people were taking refuge. People looked at these stay-at-home COVID stocks like Netflix as being some kind of port in the COVID storm, like it was a safe haven. I remember talking about that on the podcast, how ridiculous it was that people regarded these overpriced tech names as being safe havens just because everybody was piling into them because they were worried about COVID. Okay, well, what happens when COVID is over and everybody wants to pile out? But I think gold is very different, because gold is not really a safe haven from COVID. Gold is a safe haven from the COVID cure, at least the government cure. It's a safe haven from the monetary and fiscal policy mistakes that were made in reaction to COVID. That's why gold was going up. And it's because the government is going to continue to make the same monetary policy and fiscal policy mistakes after COVID. That's why gold's going to keep going up. And in fact, because of all the money they printed before COVID, because of all the extra debt that we accumulated during COVID now, that's why the Fed can't dial it back. That's why if the economy recovers from COVID, it can never recover from the addiction to stimulus. That's why the stimulus have to continue long after the disease that it was meant to cure goes away. That means inflation is going to run out of control, and even if you measure it by consumer prices. Because what's going to happen, right? Demand is going to pick back up as a result of people returning to more economic activity. But supply is going to come back with a lag, right? Demand can be turned on like a switch. Supply can't, right? Supply requires investment and production. And to the extent that a lot of these supply chains have shut down and production has been turned off, it doesn't come on, like a switch. It takes some time to recall all these factors of production and get them back into use again. And so in the meantime, you have demand outstripping supply, and that puts upward pressure on prices. But in the meantime, they're going to keep on printing money.